Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on Nigeria's Q3 2025 trade numbers, the good, the gaps, and the gains ahead. Last week, the National Bureau of Statistics, NBS, published Nigeria's third quarter 2025 July to September foreign trade in goods, physical goods, merchandise trade numbers. Nigeria's Q3 2025 trade numbers present a mixed but illuminating picture of the economy. While the country recorded higher trade volumes and a sustained trade surplus driven largely by exports, underlying structural gaps remain evident, particularly in the dominance of oil exports and the heavy reliance on imported manufactured goods. This report highlights the good in Nigeria's trade performance, examines the gap that continues to limit sustainable growth, and outlines the potential gains ahead of investors and policymakers as the economy gradually repositions for diversification and long-term resilience. Foreign trade involves buying and selling goods and services and capital across international borders. Every country has its own needs and resources, and foreign trade enables countries to fulfill those needs by importing goods and services that they cannot produce sufficiently domestically and exporting surplus goods. Total foreign trade rose by 2.4% or 0.9 trillion naira quarter-on-quarter to 38.9 trillion naira from 38 trillion naira recorded in the previous quarter, Q2 2025, April to June, and rose 8.71% or 3.1 trillion naira year-on-year relative to 35.8 trillion naira in Q3 2024. Total trade grew by 11% or 11.6 trillion naira year-on-year in the first 9 months of 2025 relative to the same period in 2024, driven by relative naira stability. Based on the report, total imports rose by 5.5% or 836 billion naira quarter-on-quarter to 16.1 trillion naira in Q3 2025 from 15.3 trillion naira in Q2 2025. However, it increased by 5.5% year-on-year from 15.3 trillion naira in Q3 2024. Nigeria's imports were dominated by mineral fuel, machinery and transport equipment, and chemicals. On the other hand, total exports increased marginally by 0.3% quarter-on-quarter to 22.8 trillion naira in Q3 2025 compared to 22.8 trillion naira in Q2 2025 and up 11.08% year-on-year from 20.5 trillion naira recorded in Q3 2024. Nigeria's trade balance was positive, exports exceeded imports, but narrowed by 10.4% quarter-on-quarter or 0.8 trillion naira to 6.7 trillion naira in Q3 2025 from 7.5 trillion naira in Q2 2025. Exports accounted for 58% of total trade, while imports were 42% in Q3 2025, compared to a ratio of 60% to 40% in Q2 2025. The top trade destinations in Q3 2025 include export-traded partners such as India, 9.9% or 2.3 trillion naira, Spain 8% or 1.8 trillion naira, France 7.3% or 1.7 trillion naira, the Netherlands 6.8% or 1.5 trillion naira, and Italy 6.4% or 1.5 trillion naira. The top import trading partners include China, 29.7% or 4.8 trillion naira, the US, 20% or 3.2 trillion naira, India, 8.6% or 1.4 trillion naira, the United Arab Emirates, 4.9% or 791 billion naira, and Belgium, 4.3% or 690 billion naira. Notably, Ivory Coast topped as Nigeria's leading African trading partner with export value of 1.4 trillion naira, which is 29% of total African exports. This is followed by South Africa with export values of 710 billion naira and import values of 163 billion naira. In terms of port activity, Apapa Port continued to dominate in Q3 2025, accounting for approximately 77% of total exports and 44% of total imports. This dependency has further eased from 79% of exports and 46% of imports in Q2 2025. Meanwhile, Lekki Deep Sea Port has strengthened its position ahead of Tin Can Island, contributing around 12% of exports and 18% of imports in Q3 2025, driven by expanded operations from the Dangote refinery and fertilizer plants. Our thoughts. 1. Oil still drives FX, but fragility remains. Despite the positive trade balance, over 86% of exports remain oil and oil-related products. This leaves Nigeria highly exposed to oil price volatility and production risks. Energy companies such as Seplat and Aradel remain key beneficiaries in the near term, but structural risks persist. 2. Non-oil exports show promise, but scale is the problem. Growth in fertilizer, cocoa products, and solid minerals is encouraging. However, non-oil exports at just 13% of total exports are insufficient to materially stabilize FX markets. Policy consistency and export financing supports are needed. 3. Agricultural exports are losing momentum. The sharp quarter-on-quarter decline in agricultural exports highlights challenges around logistics, processing capacity, and global pricing. Agro-processing firms, Presco, Okomo Oil, and cocoa processors stand to benefit from strengthened value addition and export incentives. 4. Manufacturing deficit remains a major FX leak. Nigeria continued to import finished goods while exporting raw materials. Manufactured imports accounted for nearly 50% of total imports, mainly from Asia. This remains a structural drag on FX reserves and the naira. 5. Lekki Deep Sea Port is a structural game changer. Lekki Port now accounts for growing share of both imports and exports, driven mainly by Dangote refinery and fertilizer operations. This alleviates congestion in Apapa and enhances long-term logistics efficiency. Port logistics and infrastructure remains crucial. 6. Intra-African trade opportunity remains underutilized. Exports to Africa exceeded 4.9 trillion naira. AfCFTA offers significant upside for Nigerian refiners, food processors, textiles, and building materials companies. Nigeria's Q3 2025 trade figures showed growth within balance, with the most appealing long-term investment opportunities found in energy and gas-linked exporters, agro-processing and fertilizer producers, import substitution manufacturing, export-focused firms leveraging AfCFTA, as well as ports, logistics, and industrial infrastructure. Thank you for listening. Please join us same time next week for another exciting, interesting, and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.